Good morning and good evening, ladies and gentlemen. Thank you for standing by, and welcome to Tuya Inc.'s second quarter 2025 earnings conference call. Currently, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. As a reminder, we are recording today's call. If you have any objections, you may disconnect at any time. I will now like to turn the call over to Ms. Regina Wang, Investor Relations Senior Manager of Tuya. Regina, please go ahead.
Thank you, Operator. Hello, everyone. Welcome to our second quarter 2025 earnings call. Joining us today are our founder and the CEO of Tuya, Mr. Jerry Wang, our co-founder and CFO, Mr. Alex Yang. The second quarter 2025 financial results and webcast of the conference call are available at ir.tuya.com. A replay of this call will also be available on our IR website in a few hours. Before we continue, I refer you to our safe harbor statement in our earnings press release, which applies to this call, as we will make forward-looking statements. With that, I will now turn the call to our founder and CEO, Mr. Jerry Wang. Jerry will deliver his remarks in Chinese, which will be followed by a corresponding English translation. Jerry, please.
大家好，感谢大家参加图亚智能2025年第二季度及上半年的业绩电话会。
Hello, everyone. Thank you for joining Tuya's earnings call for the second quarter of 2025.
首先，我简要总结一下整体的表现。今年上半年，公司实现了约1.55亿美金的收入，同比增长约15%，其中第二季度收入约8010万美金，同比增长9.3%。在第二季度，全球贸易环境不确定大幅上升，美国关税政策对全球可选交易电子行业造成了显著的干扰。下游零售渠道、品牌商、进口商以及出口企业的订单节奏和规划因此推迟或重新调整，但整体而言，公司保持了韧性，在包含收入增长、毛利率和利润率、AI 产品和生态建设等多个方面展现了结构性的亮点。
Let me start with a brief overview of our performance. In the first half of 2025, Tuya generated revenues of approximately $155 million, representing about 15% year-over-year growth. Revenue in the second quarter reached around $80.1 million, an increase of 9.3% year-over-year. During the quarter, global trade uncertainties intensified, with U.S. tariff policy significantly disrupting the global discretionary consumer electronics industry. As a result, downstream retail channels, brands, importers, and exporters delayed or adjusted their order pace and planning. Nevertheless, Tuya remains resilient, delivering positive outcomes across multiple fundamentals, including revenue growth, gross margin, and profitability, as well as AI products and ecosystem development.
从盈利能力上，第二季度及上半年的综合毛利率均保持着48%左右，其中3个业务板块毛利率在环比、同比维度的持续稳健。经营利润率侧，虽然上半年包含了传统淡季及全球外部挑战等情形，但我们依然做到了 non-GAAP 口径下10%的经营利润率和25%的净利润率，其中经营利润同比增长约127%，展现了图亚商业模式的经营的杠杆，能够在复杂的环境中依然持续。
In terms of profitability, we maintained a blended gross margin of around 48% for both the second quarter and the first half, with all three business segments achieving stable gross margins both sequentially and year-over-year. On the operating profit side, despite the seasonal softness in the first half and global external challenges, we still achieved a 10% non-GAAP operating margin and 25% net margin. Notably, non-GAAP operating profits grew approximately 127% year-over-year, highlighting the operating leverage embedded in Tuya's business model, which remains sustainable even in a complex environment.
AI 机遇和宏观贸易环境带来的机遇和挑战，正在推动市场更高的渗透率，以及推动开发者平台开发更高价值和全新的 AI 体验的产品。截至2季度末，我们平台上的全球开发者数已达到了151万以上。我们也会继续坚持长期主义，我们会通过 Tuya Open 和 AI Agent 开发等产品，把 AI 开发者平台推向更广泛的开发者层次，打造能够支持Tuya和行业长期发展的业务生态。
Opportunities and challenges from both AI adoption and the global trade environment are driving higher market penetration. We are also engaging our developer platform to deliver high-value and next-generation AI experiences. At the end of the second quarter, the number of global developers on our platform has reached over 1.51 million. We will remain committed to long-termism, leveraging initiatives such as Tuya Open and our AI agent development platform to broaden access to AI developer tools and build a business ecosystem that supports Tuya's and the industry's long-term growth.
接下来，请我们的 CFO 为大家带来更多的财务表现和经营进展。
Now let me turn the call over to our co-founder and CFO Alex Yang, who will share more details about our financial performance and business progress.
Hello everyone, this is Alex. I will now provide more details on our second quarter results. Please note that all figures are in US dollars and all the comparisons are year-over-year based. Let's start with the financial performance. In the second quarter of 2025, Tuya delivered revenue of about $80 million, representing 9.3% year-over-year growth. By segment, PaaS leveraged its diversified products ecosystem to capture essential consumption demand in home appliances, delivering year-over-year growth of 7%. Smart solutions supported by focused hardware offering and differentiated solutions tailored to various customer segments, withstood macro pressures and achieved year-over-year of 16.7%. SaaS and others revenue was about $11 million, up 15.6% year-over-year, driven by the continuing increase in recurring revenue, which exceeded 6% in Q2. From a regional perspective, leading long-term customers in Europe achieved double-digit growth in niche categories such as ambient lighting and home appliances, including air conditioners and air fryers. New customers including top Turkish soda storage companies and leading HVAC manufacturers in Austria and other regions too, who began cooperations on energy-saving production lines. In Asia Pacific, various rollouts progressed as expected. Several Southeast Asian telecom customers, starting with the Cube platform deployment, entered the larger scale delivery phase, while smart home and realistic products in Singapore advanced into implementations, contributing meaningful revenue across both hardware and software in the now quarter and futures. In North America, a flagship AI solutions, the Smart Bird Feeder, saw strong momentum and demand, reflecting consumers' sustained willingness to pay for emotional-driven experience by AI. In China, AI toy solutions gained positive feedback in Q2, with plans to expand IP collaborations and target diversified audience. Admittedly, even since shifting tariff policies introducing global trend uncertainty, stakeholders across the discretionary consumers electronics value chain and had become acting in their own interest, significantly pursuing offline retail system overseas. Nevertheless, Tuya's diversified products ecosystem and software technology capability enabled us to take targeted approaches to withstand their pressures, demonstrating our structural resilience. On margins, Q2 blended gross margin was 48.4%. PaaS gross margin reached a historical height of 48.7%, while Smart Solutions and SaaS and others deliver gross margin of 22.5% and 72%. Considering that Tuya's gross margin reflects the outcome of a platform-based business model combined with a rich hardware ecosystem, Q2 margins was aligned with our management expectation, maintaining stable, robust margins in a foundation for achieving strong operating leverage. On the expenses side, we maintained disciplined execution. Since early 2024, after right-sizing our team, we have managed to meet operational needs, including upgrading AI capability, increasing investment in R&D cloud and AI technology, building our AI developer community, and hosting creative events, while keeping non-GAAP net operating expenses stable. So we have remained across $30 million per quarter for 6 consecutive quarters. Additionally, in May, we achieved a decisive victory in the fierce class actions lawsuit initiated in 2022, successfully defending the rights of Tuya stakeholders. This also marked as a conclusion for the related expenses and eliminated future risk for potential losses. As a result, our operating leverage improved significantly, and we delivered nearly an 11% non-GAAP operating margin in Q2. On net profit, we achieved a 25.1% non-GAAP net margin and a 15.7% GAAP net margin in Q2, with GAAP margin expanding over 11% points. While interest rates cut absorbed part of the net margin increase, this was offset by a decline of over 50% in our accounting share-based compensation expenses, further unleashing accounting profitability. In terms of cash flow, we generated strong operating cash flow of over $18 million in Q2 and paid out our second cash dividend of about $37 million. Net cash balance stood at just above $1 billion at quarter end. Looking ahead, we'll continue to explore ways to deploy excess capitals to support our business. Next, let me share the quarter's updates on our AI developer ecosystem. So Tuya has always been at the forefront of the AI hardware and application deployment, and we remain fully committed to advance the AIoT ecosystem. So our goal is to continually lower the development threshold of AI devices products and promote their broader AI innovations and adoptions. So first of that, let me highlight 2 data points. As of June 13th, 2025, 93% of Tuya shipped products categories were equipped with AI capabilities. Meanwhile, Tuya AI developer platform delivered AI agent services that supported 150 million AI interactions per day globally, across scenarios such as AI notes, AI translate, AI health, AI energy, AI pet care, AI trendy play, AI dimming, AI safety guard, and robotics. So in line of this, we also seen strong enthusiasm and rapid expansion across our developer ecosystem infrastructures. Over the past quarter, many AI developers activated Tuya open cloud services, and commercial AI developers collectively created 9,372 AI agents across categories including toys, pets, appliances, electronic devices, and securities. These numbers reflect the growing penetration of AI into households and industrial smart devices. The Tuya open source community also gained strong traction across Discord, Reddit, WeChat groups, and other platforms. Our global developer base surpasses 27,000 for the AI stuff, with documentations reaching 55 countries and regions. Open source code contributions exceeded 2.3 million lines, and core contributors steadily emerging as the ecosystem scales. While driving developer engagement, we also emphasized co-creations within the ecosystem. Since Q2, we have partnered with ecosystem collaborators to host multiple hackathon events across online and offline channels, generating hundreds of markers, AI devices, prototypes, and with the commercial potentials. Those events spanned universities, embedded engineering communities, makerspaces, incubators, cloud developer communities, and cultural IP developers groups, continuously experimenting way to bring AI into millions of households worldwide. For example, in late July, we co-host a mega hackathon, AdventureX 2025, and attracting over 800 young developers and makers globally over 5 days. Participants create a range of original projects throughout teamwork and collaborations, with the true method feedbacks from developers and broad media coverage, reaching over 10 million of people who watch this hackathon. More importantly, we are exploring pathways for makers projects to commercialization. For example, the community initiative OTA Robot Project has entered commercializations, with distribution partners fueling its marketing and promotion. It is also driven adoptions of Tuya T5 developer board across the developer ecosystem. Another category of AI patent products, which won awards in hackathon competition, attract interest from the celebrity agency and the consumer market, drawing incubation attentions from multiple commercial partners. In addition, our collaborations with the Open Dev community is bringing AI hardware development into university and embedded developer curriculum, enable developers to practice AIoT applications during their study. So looking ahead, we'll continue our effort in 2 directions. The first one, future lower the threshold of AI developers, leveraging the Tuya's AI developer platform, AI agent platform, AI coding tools, and scenario-based teaching to help more developers to get started quickly with the AI hardware development. Secondly, accelerating the commercialization of more AI hardware innovations through collaborations within the developer community, co-creation mechanisms, and ecosystem partners to bring excellent products to market and create commercial opportunities. So to conclude, while faced macro challenge in Q2, the company maintains strong profitability in the first half of this year and made solid progress in smart solutions, AI devices, and developer ecosystem. Looking ahead, we'll remain focused on the long term, executing 3 major growth strategy to offset near-term macro challenges while strengthening our foundation for sustainable growth. So the 3 major direction will be: the first, we'll continue deepening relationship with core customers. We'll meet the different needs of both new and non-standing customers with differentiated approaches, providing tailored products, solutions, and the technology support to help them to maintain competitiveness in their respective market. Second, we'll boldly seize regional opportunities. In Europe, we'll focus on high demand categories such as AI-driven energy saving and air conditioners. In Asia Pacific, will promote smartification of residence, building, and complex through its integrated AIoT platform, combining hardware and software. In North America, we'll focus on the consumer scenarios exhibiting strong willingness to pay, such as pet or ambient entertainment. And in China, we'll deepen partnership with major companies, gradually building consumer awareness through e-commerce and pursue industry penetration via realistic growth channels. Third, we'll accelerate AI innovation among developers, covering new AI-driven hardware applications as well as agents, intelligence building hardware, driving the industry-wide shift of the smart products towards the AI agent-enabled hardware. And finally, based on our current financial performance, our board has approved a cash dividend totaling about $33 million. Regularly, dividend payment reflects Tuya's commitment to returning value to the capital market and our shareholders. They also underscored our enduring confidence in the company's industrial perspective, products portfolio, competitive positions, and long-term growth potential, regardless of the market conditions on the market side. So thank you all, operators. I think that's all we'd like to present today. We can begin with the Q&A session.
Thank you. To ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. One moment while we compile our Q&A roster. Our first question is going to come from the line of Yang Liu with Morgan Stanley. Your line is open. Please go ahead.
Thanks for the opportunity to ask a question. Two questions from my side. The first one is regarding the growth outlook. Given the changing global trade environment in late second quarter and third quarter, what is the management expectation of the business growth going into the third quarter or the rest of the year? Should we see some acceleration in top line or the past shipment growth? The second question is regarding the FX impact. Could management update us what is constant currency growth for top line in second quarter? And to help us to understand what is the FX impact to the P&L. Thank you.
Yeah, so I'll answer the first one first. So for Q3 and the rest of this year, we'll see that the uncertainty on the tariff situations continues because till now we still don't have the conclusion or we don't have the agreement between countries. So the rest of this year, we'll see that the consumer electronic categories we're covering right now still under pressure. And also the first shipment for the Q2 for those products that's been tariffed, and we will have to meet the products starting to sell, but the retail price starting to impact it. So we will have to closely an eye to witness what's going to be the end demand reflex looks like. And as far as we know that right now for the major retailers for the North America and the brands and the importers and the manufacturers, so they all have the concern that the demand was trying to have the risk of the decline after the retail price raising. So for this year, we will see that for the promotion seasons like the Christmas, Black Friday, back to school, and so all the new product planning and the promotion and forecast. So those buyers, they will already show this kind of conservative mindset. So instead of too optimistic, and so some of the orders they will shift from the higher value of the smart one into some lower value and with entry level one, and even including Europe that they have the same type of uncertainty as well. So those kind of buyers, they're not too optimistic, so they will have very they have very conscious to review all the reflects on the end users in a very short term dynamically. And also, we are facing a very long supply chain. So from the core components into the manufacturing, into the logistics internationally, and into the retails. So we have more roles on the supply chains. We have more noises for the uncertainty. Typical stuff is that while the retail price are facing pressure to raise, and then so from the retailer side into the importer side, into the brands, into the manufacturers, every people are renegotiating how to absorb those kind of raise cost. And that kind of negotiation across multiple roles, multiple entities, takes longer. So that's what we see that in the past couple of months, those kind of negotiations taking places and didn't end. A typical example, what we see is that on the offline retailers and e-commerce, those price impact and starting to reflect very directly. Like some of the robotic vacuum we can see here is that some of the fast-growing robotic vacuum brands from China, their gross margin and profit declined so much. That's kind of because of the tariff and bargain impact. So for Tuya, what we see is that the tariff impact exists, and also in the same time that last year we did quite good for the energy saving incentive program for France, and that incentive policy is trying to reduce a little bit. And so what we see is that for Q3, there's still pressure, but it should be getting better in Q4. So that's for the first question, Leo. And for the second question is that yes, there's some pressures on currency as well, but right now what we see is kind of stable. So there's pressure, but it's under control. That's all.
Thank you.
Thank you. And one moment for our next question. Our next question will be from the line of Timothy Zhao with Goldman Sachs. Your line is open. Please go ahead.
Great. Thank you, Madam, for taking my question, and congrats on the very solid results. Also, two questions from my side. One is really on the competitive landscape in the AIoT PaaS segment. Just wondering how management see the competitive advantage when I think the whole industry moving from the traditional, say, IoT PaaS to AIoT, and what are our ways to maintain such kind of competitive advantage globally? Secondly, is on your shareholder return policy. I think it's very pleased to see the dividend declaration announcement from this quarter. Just wondering if management can provide us more structural way in terms of understanding the shareholder return policy for the years ahead. Thank you.
Yes, thank you, Timothy. So for the first one, what we see is that we are doing a lot of things to to motivate those developers from the existing or from the historical IoT applications into the AI applications. So like I described that we're doing a lot of different webinars, trainings, and events that to grab all those kind of ideas, innovative plans from the developer side, that they have anything that they can think on that how it can bring AI into the new user experience together. And data I already shared is that so for the first half of this year, over 93% of the products that's building with the Tuya platform for the first half of this year already come with AI capability. So we're really doing quite good on a penetration of the combine the new AI feature set into the existing Tuya developer ecosystem and customer base as well. So that's the first one. But we'll continue to do more because a very exciting opportunity we see is that come along with through the AI stuff, we have more categories that this technology will be able to cover. And so like the toy, like this kind of emotional driven entertainment. So without the large language models, those type of categories doesn't exist or doesn't seem the opportunity how you can turn that into a smart thing. But right now it is. So we'll continue to do that. So have more of my existing developers to trying to try out the AI feature set and understand those kind of AI technology, and also to exchanging the ideas of creativity. So that's be one thing. And also another thing is that once we find out those kind of great ideas or great prototypes, so we're using our networks, using our marketing resources to incubating and helping our developer to commercialize. So that's what we continue to do. And so we're looking for to have more, I would say, AI essential applications be built out in the futures for the long run. So that's one. And the second part for the dividend or for the shareholder return. So like we said for the 2 quarters before, so we will consider the dividend as a regular policy or tool or solutions that we offer for the shareholders return besides any other things. And the dividend is based on the stable profitability of the company, the stable business model and growth, and also a very healthy net operating cash flow. So our dividend will be based on that, and we're offering as a regular solution for the shareholders. That's all, Timothy.
Great, thank you.
Thank you. And as a reminder, if you would like to ask a question, please press star 11. Our next question comes from the line of Kai Zhao with CICC. Your line is open. Please go ahead.
Okay, thank you, management. And I have 2 questions as well. My first question is on your gross margin. So with this quarter, your gross margin has steadily expanded, with margin in particular is rising fast. So my question is, what are the key drivers for the gross margin going forward? And in particular, how would the AI-related revenue affect your overall gross margin mix? So that's for the gross margin question. And my 6th question is on the SaaS and smart device solutions. So could you share the primary growth engines for the 2 sectors, and what's your outlook going forward? Thank you.
Okay, so the first one, I think that the gross margins represent. Okay, the gross margin represents the. I think the competitiveness of the technology to provide, and also the value propositions for us in the entire industry. So right now, all the customers will really see my gross margin. I think that will be as a public company, but they continue to satisfy with what we're offering, no matter it's on the technology, is on the services, is on what we can offer to help them to transit from a legacy device maker into a smart device maker, from a device reselling business model into more like the software services, AI services based recurring model. So I think that the gross margins represent that. And for us is that we manage the 3 business model separately. So for the past we're offering, so we're satisfied with the gross margin range so far. And for the SaaS, the key part is that it's a regular software based, so the gross margin above 70% will be a regular based. So we're not looking for to push that up like into 80 or 90%, because that's not realistic. But we're looking for to scale that faster. As you can see here is that starting from Q2, we really see the SaaS starting to growing faster than the past. And because we starting to acquire or transit more end users to those kind of SaaS offering as a premium features, as a recurring model, and we have more stickiness on the recurring side. So that's for the SaaS. And for the solutions we're looking for the long run is that because it's software and hardware combined, and essentially have more and more portion come from the hardware side. So for that part is that above 20% of the gross margin for the solutions already represents that we're taking a higher value proposition for that part. And so that's, I think that's what we're looking for, to see that to maintain above 20% gross margin for the solutions is what we're looking for to do, come along with our scalability. And I think that's a key part. So we feel comfortable about the current position so far, because we already take the higher values on the existing growth we have in the industry. So we'll continue to push more scalability. I think that's for that part. And the second part is about the solution, right? And so, I think that for the solutions, on the strategy side is that the solutions are not open for everyone, kind of really. So the solution will more focus on the key customers or the top tier customer in their own prospective market, either in their own region or in their own vertical industry. So the solution are providing differentiated the offerings for those customers to help them to provide a higher value products to the market. So those key customers, either they have a better position that they can offering higher pricing products, or they have the better position to provide a differentiated products. So we were not facing very brutal competitions on the commodities. So we don't offer the commodities. So I think that's the first one. And then, so through that part, we're kind of working along with those key customers to making a product roadmap 6 to 12 months ahead. And then we kind of become their key suppliers for all their most advanced products or flagship products for the long run. So I think that will be our driving forces for the long term. So the more we start to delivering for those customers, the more opportunity we have to working along with those customers for the long run, and the more opportunity we can take in more portion of their business, and for any type of smart devices for the long run. So I think that's a key part. And what do we see a very good trend here is that starting with Q2, finally we're starting to offering the AI solutions. So not only the smart bird feeders, that's what we try out for last year, but also for this Q2, we're starting to deliver the AI toy, and with the two significant leaders for the toy industry in China. So one is Haizewang, another one is IP from NetEase. And so those feedbacks from the customer side and from the end user side become very positive. And then we start to scale that kind of totally new vertical categories that we don't have before. So while we have more and more AI essential or AI empowered solutions offering, we really see that we're starting to open more doors. And for the second half of this year, and our shipment for AI-based energy solution, and we're starting to complete this, and we're looking to have that and grab that opportunity as fast as we can as well. So I think that's for the solution part.
Thank you, Alex.
Thank you. And one moment for our next question. Our next question comes from the line of Matt Ma with Jefferies. Your line is open. Please go ahead.
Hello, good morning, management. Thank you for taking my question. I have two questions. So the first one is also related to the U.S. tariffs. Are we observing a shift of China-based supply chain to overseas for our brand customers? If so, what are the impacts on Tuya? And should we expect to see incremental costs, for example, in module logistics? And the second question is related to margins. We are seeing that for smart solutions, its gross margin is 22.5% in the second quarter, which is relatively lower than previous quarters. Just wondering what is the reason behind that? And also, given our business model can enjoy a very strong operating leverage, over the next 3 to 5 years, what kind of margin profile do you expect to see the company to achieve? Thank you.
Okay. Yeah. So the first one is that, yes, after the tariff situations, every people talking about the shifting supply chains globally, but that kind of topics is not being discussed this year because the first tariff raise took place in 2018. So what we see here is that just for those products manufactured and sold to United States, different categories react in different way. So for those categories, we require a less component and less rely on very diversified supply chain. So some simple stuff like the plugs, maybe LED bulbs. So those type of categories, not only this year, I think that is 4 or 5 years ago that many manufacturers trying to relocate it in other countries like Mexico, like Vietnam, Thailand, including India. So those manufacturers already relocated somehow. But some categories super rely on their key component supplying, like the air conditioner. So they have way more complicated supply chain. It's not easy to move that out entirely. So the majorly air conditioner manufacturers still they have to produce in China. So different categories and right now be impacting in different level. But those shifting supply chain already taking place for years. So for us is that we just follow the flow. Is that wherever the customer want to produce their finished products, we just deliver our modules to their location. So I think that's the first one. But the pressure come from that, especially in Q2, as we can see that those tariff policy, challenge is that United States or President Trump tried to raise the tariff for almost every other country, including Mexico, including Japan, including Vietnam, China. So for the short term, that the importers don't know where is the safest place to produce or where is the stable place to do that. So I think that's where the shape comes from. But what we see for the long term is that anyhow, this is a negotiation across multiple entities, across multiple nations. The negotiation gonna work out with a deal. So once there is a deal, there's a price that how people have to pay that, and then there will come a conclusion. So all the merchants they know that how they can reprice that, and is trying to sell that on a steady level, even with a higher price. So that's what we're looking for to wait and find out. So those negotiations seems to progress somehow and seems to have a conclusions maybe in the next couple of months, right? We really see we extended twice, but we're looking there should be a conclusion. So we're looking for have that. So that's a first one. So for the short term, there's no easy option for the manufacturers because almost everyone be tariffed at a different price. But for the long run, that as long as there is a price, and then people will figure out how to continue to do the business because we're not cutting off. Yeah, I think that's about tariff. And second one about the gross margin, I already shared part of the parts on the previous questions. So we'll review the gross margin, split it into three sections because either the PaaS or the SaaS or the solutions, they come in a two different value proposition and facing different type of competitions. So we'll more review those gross margins to see that whether we take the higher value proposition. For the solutions, maybe we take a higher value propositions versus their in-house design team or versus any other solution providers. And for the PaaS, we review as whether we can really offering as a PaaS company or as a platform company. And for the SaaS, it's whether we are really running a SaaS-based business. So for that part, the value propositions to show the competitiveness for us as a different role. So as I shared before, that the PaaS, the range so far between 47 to 48%, we're satisfied with that. For the SaaS, above 70% as a regular SaaS company, we're good with that. And for the solutions, a higher proposition is above 20%. I think that is good. So I think that's a key part we managed it. And one of the reasons for the solutions, as you can see, that solution margin slightly decline in Q2. Reason being is that solution is more supply chain business, more supply chain related. And in Q2, we started to offering some new solutions like the AI toys, like I explained. So at the starting point of some new products or the new solutions, and we have the space to cost down, come along with the scalability. So we offering at the lower margin, we think it's fine. But to come along with our scale of the business, so we have more space that we can free the cost. So I think that's a key part. So the most important thing for us is that to proven those solutions really worked out, come along with the right end user demand, and to come with a competitiveness that we can help the customer to facing any faults. In the same time, that's come along with the scalability, we'll be able to, increase the operating average and the margin performance for the long run. I think that's how we run that. Thank you.
Thank you, Alex. That's very helpful.
Thank you. Seeing no more questions in the queue, let me turn the conference back over to Regina Wang for closing remarks.
Thank you, operator, and thank you all once again for joining us today. If you have any further questions, please feel free to contact our team of Tuya. Goodbye and see you next quarter.
This concludes today's conference call. Thank you for participating. You may now disconnect.